Hello digesters, welcome back to yet another episode. My name is Oyesigye.
I am Allan, Ninsiima. Glad to be here.
And Rodney by his side.
So today we shall be discussing digital money, tokenization, and the future of finance. The world has come to evolve and seeing changes in the forms of money. We have had digital money coming in, which is money that exists in a digital form or electronic form. So we also have things like cryptocurrency, which I'm sure you've heard about. This is a form of digital money that exists on decentralized networks. So apart from the cryptocurrencies, we have things evolving like tokenization. Now, tokenization is when there is change of real life assets like arts and lands and all those things. So they are turned into a token form where they are able to be transferred easily or sold and ownership is received. We also have what we call stable coins. So stable coins these are coins basically like the way Bitcoin in cryptocurrency. They are like cryptocurrencies which are backed by stable currencies. We have something like the US dollar tether. So this one is backed by the US dollar. Then we go forward to financial, what we call fintech, the financial technology. So this is basically the use of applications like mobile money and so on to facilitate financial transactions or financial work. So now, giving you that background and introduction of digital money, tokenization, and fintech, I want to start with a call. Can you please take us through? I want to know, in the basis of Uganda, we want to know whether this is just it's coming as a permanent thing. Do you see it coming as a permanent thing, or it's just going to be one passing trend like we have seen some of them go?
Yes, thank you. In a few years back, you'd think, yes, it might be a trend because everywhere you'd go, there's physical money, paper money. But then when you look at how people have been evolving, how transactions have been evolving, we used to do trade using physical items like cowrie shells, someone a piece of land for maybe a plot, maybe people exchange physical items. Then in came a centralized form where and then we've seen this evolve into things like digital money, like you said, simpler forms like mobile money. There have been developments like the stablecoins you talked about. People are looking forward to future advancements. Looking at that trend, looking at the way the society, the way people have handled this, the way people are adapting to it, I don't believe that it's merely a trend. I believe that with the way everyone is taking it on, it's here to stay.
Okay, as I think you've said, we have seen an example. I think the most relatable example is mobile money. I managed to read a report from Fintech. They said 66% of the Ugandans are registered on mobile money, and the number that was given for commercial bank transactions is starting to reduce. Most of the transactions are shifting to the tech world, the mobile money and so on. Now, that raises a question which I would like to pose to Allan. Now, since these things are shouldn't there be need for regulation? How do you think these things can be regulated? Because we have seen mobile money, can it be regulated? And all these currencies that are coming up, crypto. There are so many people engaging in these things, and that's how the statistics say. So, is there a way, or are they already planning a way of how they can regulate these things? Well,
Regulation would be a very good aspect because in the financial system, if you do not regulate, it becomes it will always be cumbersome upon the citizens that use it. But then this currency not easy to regulate per se, because one, they operate blockchain. It's a blockchain technology, they are digital. So the regulation, they work peer. here that I will have property on a blockchain and the other person will come and purchase some other property on the blockchain. So you will not have a central, it is not centralized business like it has always been. Regulation is easy when you're dealing with centralized stuff, but this is decentralized finance, what we call DeFi. So decentralized finance is not easy to regulate based on the fact that it is purely digital and everything is online. It is peer-to-peer, citizens will regulate themselves. So regulation becomes very tricky, but it would be very imperative for the governments an attempt on regulation, but it will be quite tricky for that is a task that is ahead actually, because those are murky waters that we have not navigated yet.
Okay, thank you. When you talk about that now, that raises the question: are there maybe a particular safeguard, say, for consumer and investor protection, so that maybe we don't lose trust? Because I'm sure we have had certain mobile money scandals, money disappearing. When you look at the recently a case in Canada where coins disappeared. So what we want to know is maybe from you, Paul, are there any is there something to trust on and base our trust on?
Actually, yes. For any sort of digital currency or form of transaction that comes up, the first thing that has to take place is they're given, I'd say, secure playgrounds where they can test their products. They're called financial sandboxes, kind of. You have companies like Agrotech. They come up with an idea of, let's say, someone can gain a certain amount of currency just by growing trees, just by doing something that's good for the environment. But then you wonder, how can you regulate this, right? How can you make this secure? But they don't let them put this out there for everyone without it being tested sufficiently. Then another thing is constant, I'd say, constant education. Like in our school programs, everyone is being told about how things are being digitized. Transacting as students, we know a lot more than someone would have known back then. Because if everyone knows about it, if everyone is being educated about it, then you won't find yourself falling victim to, I'd say, scams, falling victim to something that is not verified. And lastly, there is a system to make sure that all these technologies are keeping up with the other technologies out there. Like, people are improving in terms of weaponry, in terms of day-to-day accessories, the things you use, your phones, laptops, refrigerators, homes. All that has to be taken into account when they're looking at these financial systems, because if they lag back, then they will be slowed down, and every other kind of business you'd want to do, I'd say, at a disadvantage.
Person, if I might term it like that, because in the first place, now there will be no intermediary. If I to load my money to purchase something online, I would not need to first get approval of the bank. No, I can do it on my phone. And as you can see in the statistics, most Ugandans, maybe on the Ugandan scale, use mobile phones more than they do banks. Most of them don't have bank accounts, but the greatest number of the citizenry have mobile phones. So if I can go on my mobile phone and I want to transfer, I want to purchase an item, I load whatever I load and it goes direct to the person. I purchase an item directly on a digital base. It will now ease transaction and transfer of money, especially cross-border transaction. The normal process using the current status quo, the normal process will take you a day or 2 days to have cross-border transaction. I'm dealing with someone in Europe, but when I'm using seconds in my room is enough, so it will ease cross-border transactions, and generally the whole transfer of money and the system of finance will be eased for the greater good of this ordinary person. So I think it's a greater innovation.
Aside from that, I would like now to pose a question for Cole. Since we have been talking about the different forms that have come up, the question is, what will happen to the other banking sector that has been there, aside from these developing and they seem more easy to transact money and get money? So my question is, what will happen to the banking sector that has been there in the case that everyone gets this fever of?
Digital banking.
Yes.
Well, as they famously say, when you want to understand the future, you must look to the past. You must see how things have been moving when you're observing, whether you observe how climate has been changing. So previously, we used to do barter trade, and in barter trade, there were middlemen, the people who would actually move the assets from one person to the other. And their role was to make sure that the transaction goes through safely, securely, properly, orderly, no issues in the middle. But once people started using money, people could meet and just pull the money out of their pocket, get the good they want, and move on. So you'd think these middlemen would lose their roles. But instead, these middlemen were assimilated. They got into the banks, they got into the supermarkets, they got into all these places where these new transactions were taking place. So now, if we're to move on to these digital solutions, there are people that, for one, develop the digital currencies. There are the people who manage them. There are the people who observe how things are moving. He talked about regulation earlier. There are the people who observe that. There are people who look over that. Because as much as we're using these electronic solutions, we trust human beings more. So there have to be a human set of eyes behind everything that we're doing. So these systems that are already in place will not simply disappear. Rather, they'll be assimilated. They'll just be morphed into the new systems.
Okay. So that means that the banking system will not basically go away. It will be like a foundation.
Yeah.
For these others.
Exactly.
Okay. So I think now we shift and look at the future of the financial technology. Will the financial technology be will it create equality? Will it improve lives, or will it downgrade or create inequality? What will be its impact, or what is there in the future of fintech or financial technology?
Well, the future, of course, is uncertain because this is a new area. Usually we do not have a script that is crystal clear. But like he said, that we shall build from the current blocks, how these banks have been operating. You're seeing very many banks, like Centenary Bank in the case of Uganda, using financial technology, having financial technological arms now. Most of the banks are now buying that idea. They have the traditional system, but they're also embracing financial technologies to enable the transactions to get faster because they see where the world is going. So financial technology is inevitable. The future, of course, somewhat it looks bleak, but we know it is better because this financial technology is now, for example, the blockchains that are being created, the peer-to-peer and the developments. You're seeing in the case of Uganda, you're seeing Numida, you're seeing agri-tech, you're seeing what farmers themselves. If a mere farmer from the very villages in Uganda can have to send his money online and go digital and transact online, everything digital, that means it is going to the downward spiral. It is going to everyone. Every individual is feeling the impact now. That means the future will purely go digital. So fintech is here to stay. That is the first thing. But also, when you look at the rise of cryptocurrency and look at Bitcoin and stablecoins in the US, they are trying to even embed them in their regulatory framework. Recently, US wanted to pass a law that could limit but also enhance the growth of stablecoins and Bitcoins in their currency. That means countries are beginning to actually get to this reality. They're saying, oh, look here, this is the new future. The future is here and it is unavoidable. Even in Italy, they are trying to limit the influence of AI and in the financial regulation sector. Like that, countries are embracing it. And in the global south, they told you the statistics show that in the global south, 40 million of the people in the global south are now using mobile money to transact. They no longer go to banks. That shows you how the future is. So I have a huge feeling that financial technology will create a big light in the future, though it is uncertain and we need to be stringent on regulation and make sure we have a clear formula that we follow. But away from that, financial technology is unstoppable.
Okay, I think like the way you've said it, I was reading, when I read the FinScope report, they're showing in the US, Canada, and where the percentages have been rising from, I think, 21 to 24% of the people who are engaging in in cryptocurrency.
Yeah,
but then in Africa, they say it's still a bit low. So as we've discussed that, what do you guys think is the relevance of these changing forms of money, the cryptos and the digital currencies and so on? What do you think on in the case of Uganda, on that farmer, that border person, whoever, the teacher? What do you think? What impact do these currencies have on that person?
Well, the first thing I would look at is the scope. Earlier, when someone's doing trade, when someone chooses to venture into business, they would look at the people around them, they would look at the needs of those in their specific region, in the people that they can reach. But now, with the introduction of fintech, or if we're to go into, let's say, the local herdsman, he might not have the most recent iPhone or something like that, but they have simple mobile phones they can do calls on, they can transact using mobile money with SSD codes. And all this allows someone, let's say in Mbarara, to make a deal with someone in Arua without having to actually get there. Even across borders, you could make a deal with someone at the border of Mombasa and get something into the country without necessarily spending on the costs of a bus trip to Kenya, another bus trip to the border. It eases these across border transactions for for any kind of person, whether it's a big businessman or someone that's just looking for a new kind of brand to like trade. Another thing is that it's cheaper when it comes to charges. When you look at certain mobile money transactions, you can face charges of between 1 to 5%. But then when we look at things like the CBDCs, the things like the stablecoins, with the right methods, you can go to almost no charges while still doing your transactions fully comfortably, and you're making the money without losing much. So people are finding these ways easier, and that's why people are moving through different groups, different villages, different organizations, introducing the idea of financial technology, the idea of digital banking, the idea of digital transactions, because it becomes easy for everyone to make money, and hence the country is growing financially.
Wow, wow, wow. I think that's a very good explanation and a good take on the emerging or evolving trends in terms of finance and money, the future of technology in finance, the tokenization and the digital currencies. So I think we can also say that the numbers are rising, as we have seen. The new generation, let's call them the Gen Z, they're taking these digital currencies, the cryptos and so on, very seriously. So I think you can take some time and look into those and see how they work. Other than that, we kindly encourage you to continue watching, share, like, and subscribe. And I think that brings us to the end. Thank you, guys. I remain your host, Noble Oyesigye. Thank you.